The Federal Reserve has released an internal memorandum about the collapse of its equity-holding banks in the past 2 days. I just read this 118-page document, and it shocked me. Friends who need the original text can also invite it in the member area. In short, the internal Fed has started to fight each other. The overall regulatory group of the Washington Fed, the front-end bank regulatory group of the Federal Reserve in San Francisco, and the voting members of the Federal Reserve, including the Federal Reserve, are still the core of 2 points. First, last time, when I talked about the letter from JP Morgan Chase CEO to shareholders, I mentioned that according to the 2019 legislation, the Federal Reserve allowed banks to exclude Treasury bonds from the capital adequacy calculation required by regulators after the outbreak of the epidemic in 2020. This led to banks, especially small and medium-sized banks, buying a large amount of Treasury bonds, which then caused huge losses in the environment of interest rate hikes. In addition, the Federal Reserve's stress test for banks in recent years has taken into account the private equity rate to increase asset prices.